Welcome G3 investors. This is Greg Gallagher. It's Monday evening, July 13th, and I'm going to start with a schedule that I got from reading an article by Lance Roberts on, and he basically was saying this market is nuts, and he's showing the hyperbolic move here. This blue line is the Nasdaq Composite Index, and the orange line down here is the S&P, and you can see the divergence that has gone on here since about 2013. And what it really does is it really points out the same thing happened in 99 and 2000 when there was a divergence between these two indexes, and then we had this hyperbolic or parabolic move up back in 2000, and then basically the market crashed. And that's what we're looking at. Interestingly enough, I just happened to be looking at the same thing at the same time. Great minds think alike. And I saw the same thing on this chart here, where the Nasdaq Composite is being compared to the S&P 500. And you can see the divergence starting right there in October 2013, and it just gets bigger and bigger and bigger. And then we had this big correction in March, the COVID-19 correction, everybody's calling it. And then the Nasdaq went marching off, just parabolic move to new all-time highs in just a very short period of time, 3.5 months. And of course the S&P 500 has gotten above its 200-day moving line average here, the red, but it stayed above that. So to my way of thinking, when the S&P is above the 200-day, you're in a positive market, but it's not getting its new all-time high. So what happened today? Well, the Nasdaq made a new all-time high at $10,825, if you will, and then, or points, and then it closed down on the day, 434 points, reversing 4% on the day to close at 10,391. That's rounding off, but after this big move, it really started about right here back in April, and it just straight up. And really, this last 14-day period has just been parabolic. And volume was a little higher today. Now, if we look at the S&P 500, you'll see a similar but not as defined move. See, we didn't retake our old high was back here. We didn't get to that this year. Although I think it might have closed close. It might have gotten close to the year-to-date high or something today. I don't know. Anyway, so today about 2 o'clock, the U.S. Treasury announced that the deficit for June was a record $800 and some billion. I don't even have the number, but it was a huge deficit, and it seemed like that kind of had an impact on it. But I just think it's just the fact that if you look at all these glam stocks like Tesla, which has been driving the Nasdaq up with this parabolic move here, I mean, there we are. That's June 30th. So in basically, what, 14 days or so, it's went up, well, 1794, almost 1800, almost 800 points. But today, it met its maker. And again, I got nothing against Tesla, but this is a company that's just starting to make money, supposedly. Never made money in any past year, and it's valued more valuable than several other car companies when you add them together. So I never understood the valuation of Tesla, and I never will. But that's not really. The real story is Amazon, the Fang Man stocks, if you will, and it did the hyperbolic move and then reversed today. I'm sure Apple looks very similar. Yep, Apple looks the same. Microsoft,